What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today the stock market finally closed at an all-time high. It seems like for the entire month of August, pretty much, at least the last few weeks, the S&P 500 has been teasing, has been playing with that all-time high. Really, the real resistance point was the 3380 mark, and finally got above, closed above, and then today gapped up, and we had a pretty strong close today as well. So today we're going to be looking at what the stock market is doing right now, the fact that it is now on a path that looks like the beginning of the melt up, the crack up boom that I've been talking about for a while on this channel. And what that means for you is that there's potentially the opportunity to make some money. Let's dive in. All right, guys, so behind me right here, I've got a 6-month or so chart of the S&P 500 sitting there. And you can see that right over here, the last few weeks in August, we've been playing with this resistance line here. This is the 3380 mark, and that was resistance because it was resistance all the way back here in February. And really, it was 3380. That was the resistance for the closing price, and we got above it in February briefly, but it was a fake breakout. We broke back down beneath it, and that was right before the market really collapsed when the coronavirus panic really started to hit the markets. Now, this video is technically speaking, technical analysis, basically just charting, looking at trends and patterns and price targets. If you want my fundamental analysis of the economy and the stock market, go watch my last video about how the economy is actually crumbling despite what mainstream financial media is saying. Nobody's really talking about it, but the economy, the real economy, everyday person economy is actually crumbling despite the fact that a few stocks are pushing the stock averages, the market averages, to all-time highs. But here we do have a breakout, and it was a strong breakout because we tested that resistance over and over and over for the past few weeks. We finally broke out, and it was a gap up, and then we closed very strong today. It's not like we came straight back down and erased the gap. We closed up, we closed high today, and so it was some strong price action today. Now, if you remember a few months back, I made my price targets video about the S&P 500, gold, silver, Bitcoin, and the dollar. I think those were the ones that I put my price targets on, and every single one has hit now. So 3,400 was my price target for the S&P 500 to hit by the end of August. Gold was 1,900. Silver was 25.26. The dollar was originally 95, and I lowered it to 93 once it hit 95, and again, now it has already hit 93. And then for Bitcoin, it was 13,000, and that's the one that has not hit yet. Although, to be fair, in my defense, I did say I wouldn't be surprised if it hit 13,000 or 6,000 because it's just still pretty volatile at this point. And so I wasn't making any big bets on the $13,000 mark for Bitcoin. Now, my next few months of price targets, I'm going to be making a video about it next week because I want to see how the rest of August plays out for the precious metals markets. I want to see how, if at all, the shorts are able to resolve themselves, or if the banks stay in a heavy net short position. I want to see what the money managers do, the hedge funds, the smart money in the gold space do, whether they've pared down their longs, their shorts, whether they're neutral or not. So I want to see how everything plays out for this month because we've seen some unique things happen in the precious metals market recently. I've made videos about it. You can go back and find those and watch those. I made videos about that recently. So next week, I will be making a new updated price targets video on the S&P 500, gold, silver, Bitcoin, the dollar, and maybe a few others thrown in there as well. And it will be for the election. That's going to be my next date that I'm looking at here because quite honestly, anything post-election is at the very least going to be volatile, and we're likely to see some unexpected things happen in the various sectors, industries, markets, regardless of who wins. So my next set of price targets that I'll be releasing next week are going to be up until the point of the election. But just as a sneak peek, since we did just break out on the S&P 500, it looks like this is the start of the melt up. And so continuing with what central bankers all around the world are doing with the quantitative easing, debt monetization, artificially low interest rates, buying corporate bonds, these are all forces that push asset prices higher. So fundamentally, we still do have tailwinds behind the markets, the financial markets like the S&P 500, even though the economy is crumbling. And in fact, anytime we do see news come out about the economy really struggling, that just gives more fuel to the fire for the central banks to continue doing the things that drive the stock market higher. Printing money. Now, technically speaking, whenever you make new highs, usually you do come back down and retest what was prior resistance. So in this case, right about 3380, 3400. So, but you do usually have a pop first. And so over the next few weeks, I wouldn't be surprised to see a big pop and then a little bit of a sell-off to come back down and retest to make sure that what was that prior ceiling holds as a new floor, and then to really rally from there. And so by the election, I would not be surprised at all to see the S&P 500 at 3,800, 4,000, 4,200, a really high number like that. I would not be surprised at all. And I also wouldn't be surprised to see a little bit of a catch up from some of the value, maybe the Russell 2000, the Dow. I would not be surprised at all to see a little bit of a catch up, since we've had just a few tech stocks kind of leading the way with pushing the stock market higher. So I wouldn't be surprised to see some of that convergence happen, where you see some of the others catch up relative in performance to the few that have gotten us here. Now, one more thing that I'm watching before I tidy up these price targets and give some more specific date and prices for my price targets is on Thursday, Jerome Powell is going to be speaking at Jackson Hole. Now, this is a conference that the Federal Reserve usually does. It's going to be virtual this year, but it's expected that he's going to be delivering some impactful, to say the least, remarks about what the Federal Reserve is going to be doing to target inflation, because from their own measurements, the Federal Reserve has not been effective at hitting the inflation numbers they want. Now, this is all just in public, because behind closed doors, they have acknowledged before, documented by Danielle DiMartino Booth in her book, Fed Up, they've acknowledged the fact that their measurements of inflation don't work. They're broken. So they know this behind closed doors, but they don't admit it publicly. But the reason why they don't is because really what they need is they need the ability to print money, to monetize debt, to cause inflation to happen without the official numbers showing it. Because if the official numbers show it, then the market set interest rates will snap back, and they will try to pop in order to compensate lenders for that inflation. Because if lenders aren't compensated for the inflation that happens, that means if you lend out at 3%, but inflation is running at 4%, then you're getting back less purchasing power than what you lent out. And so any interest rate that is set by the market will always try to anticipate what inflation is going to be. So if the official inflation numbers show that inflation is happening, well, interest rates that are controlled by the market, that are set by market participants, are going to rise. But the Federal Reserve and the federal government can't afford interest rates to spike. And so, number one, if that does happen, you'll start to see more nationalization of interest rates and lending and of the credit markets to make sure that interest rates are held lower. Something like a complete nationalization of the mortgage industry, I wouldn't be surprised to see, which it's kind of there already with purchases of mortgage-backed securities, keeping the prices high to keep the rates low, but it's not fully there yet. And so I wouldn't be surprised to see mortgages pegged at a 2% or a 1% to keep rates low if inflation numbers, the official ones, do start ticking up. But ultimately, what the Federal Reserve wants is inflation to be high without the numbers showing it. That way, they can pay for things without people knowing and get away with it for longer. And so I'll be making a video about that as long as there's, something of substance to comment on after he delivers his remarks on Thursday. So we'll see. But ultimately, It looks like they're just going to be paying lip service to the fact that they're going to want to try and target inflation in a more aggressive manner than they have before. But ultimately, I don't expect the official numbers to show it until until the real inflation numbers are far higher than what they're actually admitting to, and until it's too late for them to do anything to pull it back. Now, the last thing that I want to mention for you guys, for my YouTube subscribers today, something I've never mentioned on my channel before. But one thing that I do is work one-on-one with people. I'll do video meetings to talk about whether it's financial education, financial topics, looking over investment portfolio allocations, talking about general trading ideas or strategies. And so I do these one-on-one video meetings. And I run this through my Patreon account. And at the end of every video, the little Patreon button will come up. I also link my Patreon in the description below. But I wanted to let you guys know about it because my slots are actually starting to fill up. And just in case any of you were knew that I was doing that because you've visited my Patreon page before, or if you didn't know that I did that, did the one-on-one meetings, and if you're interested in that, I want to let you know that they're filling up because you guys have been my subscribers and my viewers for a long time here. So want to let you know about that. I have two different levels basically. One is a monthly one, and that's a little bit more expensive. And then one is a quarterly one, and that one's a little bit more cost effective for you. So the monthly one, that one just has a couple of slots left. Really, it's almost full. And then I've got a few more slots left on on the quarterly one. And so if you're interested in working with me one-on-one and meeting with me either monthly or quarterly, visit my Patreon. The button comes up at the end of every one of my videos, and I've got it linked in the description below. And they do fill up. I'm not going to be increasing the number of these that I offer simply because it's one-on-one, and so it's just a time thing for me. So I only have the capacity to do a certain number of these meetings, on a weekly, daily, monthly basis. And so once they're filled up, they're filled up. And so if you're interested, don't wait, because if you do, there might not be any slots left by the time you go to sign up. So check it out in the description for my Patreon page below. And that's all for today. I really appreciate you guys. Thanks so much for watching. Have a great day.